Good morning, Paul Georgie from Allendale. It's September 9th, 2011. On Friday morning, we've got the President's speech and Fed Chairman's Bernanke's speech out of the way yesterday, so trade can go on and focus on the next issues. And one of the main issues that we've got in front of us right now is the USDA supply-demand report Monday morning at 7:30. The trade's expecting in corn about a $400 million bushel drop in production, down to about a 12.519 total yield on average. That takes the average yield down to 148.8. That's less than the USDA's number in August of a 153 yield. So that's trade's going to be focusing on that here today. I think we'll see some position evening ahead of that report. We've seen a drop here the last few days in price. I would expect that any kind of setbacks would be well supported today as traders want to get long and probably be positioned on the long side going into this report, because of the thought that we will see lower yield projections in both corn and soybeans. Therefore, overall production will be down and ending stocks will be tighter on this report on Monday morning. So stay tuned to Allendale Research, and we'll get you the information there as soon as we have it on Monday morning. Some other things that are supportive to the market is talk yesterday. A group out of China suggested that the Chinese imports of soybeans would increase about 10% here in this next marketing year, up to as much as 58 to 60 million metric tons of soybeans. Main reason for this strength is their hog industry. The hog industry continues to grow by leaps and bounds, and it's causing an increase in demand for soybean meal and protein, and therefore they're going to need to import more beans and process more beans in order to meet that need. And some of the problems that go with that, however, we're hearing that in the ports of China, soybeans are sitting on barges waiting to be unloaded and moved into the country. So that's slowing down some import, certainly slowing down our imports, our shipments of soybeans to China. Other news, yesterday, India announced that they will open exports of wheat, which probably is a good thing on their part, although it may weigh on prices here around the world. But they've got a large amount of wheat in storage. They don't have the quality of storage facilities to keep this wheat. In years past, where they've tried storing it for a long period of time, it went out of condition and they lost it. So that's a main reason for their opening up these exports. So looking at the grain market today, expect to see support on weakness, and we would expect to see firmness into the close, probably in the grain complex, as we see a little bit of short covering here, some bargain hunters stepping in looking for some purchases in these grains going into this report on Monday morning. In the livestock trade, cash cattle hasn't traded yet. We've got packers with bids at 112. Last week we were at 113, and we've got offers in the feedlots at 116. So very widespread there in the cash market. Futures prices have continued to strengthen over the last few days, and would suggest that cash cattle should trade at that 116 area here today. Using a normal basis, that would be about $3 higher than last week. But cutout values, on the other hand, have continued to slide. So packers are very reluctant to be very aggressive here, and we're going to have to see who shows their hands first here today as we go along and see if this cash market can actually strengthen as much as the futures are suggesting. In the hog complex, higher cash prices there have helped support the futures, and looking at the hog market from a technical perspective, and even some fundamentalists are talking about, hell, maybe this market is bottomed and we're ready for the seasonal rally. Well, I got to remind you, if you look at a seasonal chart on hogs, we typically get a rally into mid-September to late September off of buying demand from the retailers as they prepare for the featuring of October pork month. So that is, I guess, a warning sign that we still are concerned that maybe this hog market isn't finished with the downtrend as we go into the fall, when weight should increase, supplies should increase, especially as we go into the December time period. So something to stay in touch with Allendale's research on. Another supportive factor for the pork is the Chinese. The strength in their pork prices lends the idea that we will see more Chinese buying of U.S. pork here over the next several weeks. So that is keeping the trend moving higher at this point in time, and we are looking at this as opportunities to make some sales here for this October contract on further strength. So keep in touch with the Allendale representative. We'll help you work through these volatile times, and we wish everybody a very successful trading day, and we'll talk to you on Monday morning.